presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day. We're going to be joined today by Basil Chapman of the Opening Call and Tim Ord of the Ord Oracle. I know we are looking forward to that. Let's take a look right now. We got going on the SPY. You're trading up about 0.07% at 605.31, marching higher. Composite off about 0.19% at 19,676. Dow Jones Industrial trading up about 0.27% at 44,590, with those Russell futures trading off about 0.64% at 2,282. And of course, your dollar trading off about 0.47% at 107.94. Crude oil trading about 1.44%, 73.36. Gold off a bit, still very high. We're at 2,929, with copper trading off about 2.35% at $4 and nearly 60 cents, with silver off about 0.6% and 32.29. Oh boy. Okay, so Lunar's trading off quite a bit. PL's trading off quite a bit. VUZ is trading off. We're not going to have too much time for kind of what I'm looking at today. Of course, we're going to go through all of this on Wednesday. One of the things I want to talk about VUZ is one of the gambles we've been doing with it. I say gambles. One of the things we've been anticipating is that their waveguides would be used by the military, just as force multiplier. It seems like Anduril has actually gotten that contract from Microsoft. That's $22 billion IVAS contract over Anduril. You're going to be using the Lattice program for mixed reality goggles that will be deployed to troops. So VUZ, in my opinion, has just, again, on my thesis and why I liked VUZ and why I wanted to be in it, that's kind of gone right now. One thing to look at, and again, we'll talk a lot more about this tomorrow, is Spire. Okay, so Spire trading off about 3.59%, satellite company. They are actually partnered with Anduril to provide these Lattice services. So this is very interesting, and I want to do a little bit more research on Spire before I make any strong decision on it. But with Anduril getting this massive contract, really developing into quite a mature company, these kind of attached companies do quite well. Ones that Anduril relies on to provide its service. So we're taking a look at Spire a little bit on Wednesday as well. Taking a look at SMCI, a little bit of a shakeout before earnings. That's kind of to be anticipated. It's actually quite surprising how well this has been holding. I mean, you had a local high of about 42.31. You're trading right now at 39.72. It has found a very strong daily support at that $39 area. We are going to be getting, earnings. We're going to be getting a business update at 5 p.m. today. I still hold my calls. Of course, those are going to be expiring on February 28th, and I decided to do that in order to try to eliminate any insane volatility. Let's say, they do well. I mean, the stock can still dump and people can collect at the bottom, right? You've had a massive amount of institutional accumulation of this equity over the past few months. So it'll be interesting to see kind of what happens. Tesla continuing to be eroded. I mean, wow, guys, you're off 6.4. This is approaching that target that we gave, just at a rapid pace, probably faster than I anticipated. And again, so you have Elon's brother selling off quite a bit, and that's fine. Obviously, that's suppressing the stock and dumping it down quite a bit. What I would say, okay, he reduced his stake by 5%. That's Kimball Musk. That's about $28 million. These guys still have problems. I mean, you have BYD coming out with very advanced self-driving on $10,000 USD vehicles. I mean, what can Tesla do at this moment? I think these guys are very difficult. I really have my conviction gets stronger as time goes on, kind of a price target around here, right? From right before this Trump rally, maybe even lower before to these earnings, because I think their edge or their perceived edge is kind of evaporated a little bit. And I don't think that optimists will be able to float this stock back to all-time highs or really even hold it above 300 for very long. That's, of course, where I'm at now. We've really seen a pretty stark decline over the past few trading sessions. Well, that's kind of my wrap-up. We're going to talk a little bit more Wednesday on everything like that. Let's move over right now to TFNN.com. Of course, every Tuesday we are joined by Basil Chapman. Basil Chapman is the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here on TFNN. Additionally, he is the author of the Opening Call newsletter. Again, this is one of my favorite newsletters. I love reading this newsletter. He's always making fantastic moves. One of the things that I think is very positive about this is that he routinely does these 90-minute live webinars, right, for subscribers only. So the most recent one he did was November 14th, and that was a massive sector rotation. I personally think the analysis that he did was fantastic, and it helped me really look at the cycle we actually are now in far better. So I really recommend checking that out. You can do so if it's your first time subscribing. You do so for 30 days risk-free. If for whatever reason it doesn't work out for you, we will give you your money back, no questions asked, but we are betting that it is going to work out for you. Basil, how are you doing?
I'm doing well, Jacob. Thank you. How are you?
I'm doing well. This is quite an interesting market. I've been having a lot of fun the past few days looking at some of these equities. We've had a massive change up, I've, of course, been looking at Tesla constantly. Nebius, one that we've been looking at, has done fantastic. So I'm curious to what you're looking at right now.
So what? This is a potential. I really think it's more like a whack-a-mole because stocks that look very weak at a certain point suddenly, for instance, look, I was anticipating there was some weakness in the Dow. So we got the weakness, but at the same time, there are two patterns that I'm looking at. One is this H pattern where the price comes down sharply and then rolls over at a peak A or B and comes down and retests the left side low. If this pattern doesn't go to the left side low, but in fact starts another little bounce, there's a chance that it could make another arch and looks like a lowercase M-shaped pattern. In this one, it's the reverse. It's upside down. The reverse, it's like a reverse Y pattern. If the left side high is taken out, you can go quite a bit higher. Now look how fascinating these are one line and one arch, one line and one cup formation. Look at this. Here's the Dow. It made a high of 45,054 just under 2 weeks ago. On the 4th of December, makes a high of 45,073. So this was just less than 20 points away from that all-time high. Try to rally, and that's about 20 points below the high of 45,054, and there's that arch formation. And I typed this in the other day, and I put news because this whole area here represents news. And I'll show you what happened today, how just a few stocks managed to spike the Dow, and yet there's still some internal weakness short term.
Well, fantastic, Basil. Please stay right there, folks. We'll be right back with Basil Chapman right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour, live at 10 a.m. Eastern Time every day. The market is open right here on TFNN. Basil, before we went to the break, we're looking at the INDU, some cup formations. I wonder if you had any more insights for us on that, because I love listening to this kind of stuff.
So basically, I typed in news. So these rectangle formations can last a lot longer than your patience, as the price just trades within a fairly narrow range. But this chart says very clearly that if the Dow closes under, it's at 44,604 right now. If it closes under, I would say 44,200. Well, certainly first 44,000. That's going to mean that this low that was right here on the 3rd of February, 43,879, becomes really critical, because it's that H pattern low that's taken out. So in the meantime, excuse me, the Dow is holding quite well. The 9-period moving average is still way over the 14. We have taken some insurance. You know, we went long the day of the low, the 13th of January. We added to our long positions in the Dow, and now we've taken a kind of an insurance policy just for the moment. But look at this cup formation in the weekly chart. So if the Dow at any point starts trading in the 45,300s, this is a cap at the moment. But if it manages to do that, that's going to be very positive. So I said whack-a-mole. So look, IBM yesterday, a Dow component, was looking quite poor just on the very short term, and then suddenly it has a spike today. Intel, one of the worst of the semiconductors, one of the worst of the semiconductors, out of the blue, it's trading in the 18s. Yeah. Suddenly pops today to 2188. It's pulling back, of course. But this is not a great chart pattern. No. What was the other one? And then Coca-Cola suddenly comes out with earnings. Bam, up 4.5%.
Yep.
So that's what I'm saying. So within the context of the framework of each sector that you're looking at, be prepared that there are just enough stocks that could move that index a little bit higher and also a little bit lower. So I think we're kind of stuck for the moment. If you're looking at gold, we've been along gold for some time. Oh, I've got this throat thing. Hold on a second.
Oh, no problem, Basil. Yeah, the Coke play was very interesting. You know, we were speaking about that a little bit yesterday. They've had some, you know, the past few quarters, you had some kind of declining sale volume, but as we were kind of looking at even just the general market sentiment of people talking about it online and in the culture was huge, and it's great to see Coke take off like that.
That's right. So and it wasn't doing anything yesterday. So
that's
this
right.
is
I
very
know.
sudden.
Yes.
So we've been long gold for some time. and this has acted extremely well. I suspect that at the 2968 level, that you're going to be looking at the 29,900. Sorry. Why is this throat just messing me around?
The allergies are bad for me too, Basil.
No, I don't have allergies. This is just part of the. I had COVID recently, so I'm still getting over it. So 2990 area should be quite strong resistance. So that makes the millennium, the 3000 level, something to monitor closely. Okay. I don't have anything technically saying, oh, gold, this is the end. I'm saying that there should be some digestive phase right now. We've been looking, so we took a little bit off our gold position. And if you're looking at this weekly chart, that is still very, very strong. And the monthly chart is still very strong. But this is also part of the vernacular of countries really buying gold for some time now, just because of the uncertainty about the global and global economic aspect.
That's right.
So here's another thing that I'm looking at. Bitcoin, which has had a fantastic move, has started the sideways consolidation. So I think that's going to continue for a little while longer. We've been long the Bitcoin, taking some profits, and now we're looking at this kind of digesting the gains. And I think this is what we're looking at throughout the market. Some of the stocks that have done fantastically, for instance, Robinhood, which we've been long since the day after the low in August. We've been taking something off, and it's got earnings tomorrow. Mm-hmm. Yeah, for us, it's gone from the 16s to the 57 area. So we've had some really nice gains. We've still got our core position. But just on a visual basis, it looks somewhat overbought. It doesn't say that it has to crash. It just says, consolidation over a couple of weeks. And I think that could be the case in many of the areas that have done very, even the AIQ, which I talk about often, that we've been long quite some time, the artificial intelligence ETF. Getting to a point you can see in the weekly chart, just a little stretched. So I'd be quite prepared. I'd love to see some kind of consolidation, maybe lasting into March. We often have major lows in March and October. So I would like very much to see a consolidation that goes on, kind of a mixed performance with a cap on the upside for most of the indexes. Look at the QQQ. Look at this barrier that they have to get through. Almost there, but this down channel, I call it the inside track repellent zone. The Qs have to get into the 5. They're at 528. This is the NDX 100. Has to really push sharply into the 534, 35 area, and that'll be very good action. So there's a lot to do, but I also think there's also a lot of constructive work. I want to see the regional banks, which we've been long, I want to see them get some kind of boost to the upside. So this is a time where we might be seeing a rotation, and that rotation is going to be very important as we come out at the end of February, going into March. What are the survivors? What are the ones that were the weakest that are actually now showing some strength? Maybe steals in that area. Mm-hmm. I know you always talk about STLD. This is doing very nicely on a short-term basis. But if you look at the weekly chart, there's quite a bit of work to be done, but it's a very nice move off the 110 area to 135.
Yes. So
that's what I'm saying. The laggards might start to find some improvement, and I'm expecting a digestive phase that continues, and that's going to – it would be lovely if the tech sector took a breather and you start to see the cyclicals start to find some strength. And I'm hoping that happens over the next 3-4 weeks.
Absolutely. And I can totally see that as well. Even from some of the earnings we had from very large hyperscalers, growth is starting to slow a little bit. There's going to be a lot of CapEx going on. I think, of course, at least within the AI, you're starting to phase out of these big developers of it. Of course, that'll still be prominent, but, we're going to get into data centers. We're going to get into energy. I mean, we just had the vice president today speak in France. And Macron, the president of France, echoed that we are going to use our excess energy. So you have a big cycle rotation. Even what you said a few weeks ago with your stocks that are winners right now are most likely going to be relatively strong, or at least keep an eye out for it. And I've been looking at Nebius, NBIS, and that was one that was very strong during a lot of the volatility in January, and has continued, I think, to do quite well. Of course, you had that big sell-off for DeepSeek, but I think that was misplaced fear among a lot of analysts.
Well, that's what the charts certainly say. It was, I call these one-offs. Just this, and that's what I mean by this whack-a-mole. This is sudden fear or sudden exuberance. But basically, we kind of this is really a rolling. high-level rolling correction. That's really what I call it, so that there's no real breakdown, but there's no real breakout. And I think that's really important because it says the market is assessing what happened, got a new administration, you have to assess what's coming up. And I think that to me makes a far more, a stronger move as we come into the March-April period.
Absolutely. Basil, thank you so much. It's always great having you on. We will see you. Are you on tomorrow?
I'll be out for about 2 weeks, and then I'll be back. So, I'm on tomorrow morning. Yeah, tomorrow morning, and then I'm out of here.
Well, we'll see you tomorrow morning then, Basil. Take care.
Okay. Thank you, Jacob.
Thanks, Basil. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Just checking on something right now. It seems like Nebius is announcing that they're adding the new 8-rack NVL72 from NVIDIA to their data centers. That will be the data centers in Finland and America, which is great. Again, they're expanding into America, which we're very excited for. I believe they have earnings coming up on February 21st. So that will be, let's see here, what is that, next week or the week prior? Yeah, it'll be next week, Friday. Yeah, guys, I'm bullish on it. You know, we were getting in, I think I got around 34 initially, and then we DCA'd right on this massive dip, and it's been a great ride. I strongly recommend checking it out. Again, they also have exposure in a weird way, and this is not part of my big thesis with Nebius, but they have AV Ride, you know, which is partnered with Uber for that autonomous driving. You know, what a shame with Uber. You know, I had just really gotten out of it after earnings. It kind of dumped after earnings, unfortunately. Then you have Ackman, of course. So I just kind of, I wanted money for other things. I usually don't sell at a loss. It was a very minor one, but I just needed capital right then. And, you know, yeah, of course you have Ackman immediately come out and say, hey, you know, I have like a $2 billion stake in Uber, and it goes up to, what are we, 77.18 right now, and it had a cost of about 67. So that's very fun. It's always goes to show that, you know, patience matters with these kind of things, but some interesting development with Nebius. Very much looking forward to earnings report and forward guidance for Nebius. Let's go over right now. Of course, every Tuesday and Thursday, we are joined by our man Tim Ord of the Ord Oracle. Strongly recommend checking his website out at ord-oracle.com. You get his newsletter book, and you can contact him as well. Additionally, if you go over to the services tab of TFNN, we have two fantastic webinars from Tim Ord. That is the Secret Science of Market Tops, which we've had a very toppy market, or at least it seems like we have. So I strongly recommend checking out that webinar if you want to know for sure. And then, of course, the 6 secret ratios every trader should know. Tim, how are you doing?
Good. There is quite a bit of stuff going on.
Yeah.
Let's start with chart 1. It's kind of a review. But anyhow, the chart 1 is a Zwag breast thrust indicator. We talked about it. We got a signal here in January, I think it was. Anyhow, to get to define what the Zwag breast thrust indicator is, it's advancing issues over time, total issues, and take a 10-day average of it. And to trigger this ZBT, Zwag breast thrust indicator, it needs to get to 0.4 or lower, then rally to 0.6 or higher within 10 days or less. We actually got down to 0.41, but it rallied to 0.61 in 6 days. So in my opinion, that's close enough. And a lot of times, Zwag breast thrust indicators kind of form a support area. So I marked the previous times Zwag breast thrust indicators on this chart where it got signaled. And I put the ZBT suggest support. So we have support around eyeball, and it looks like about 5,800, which is basically the recent lows of December, January. So that's supposedly this indicator only gets triggered in bull markets. So we'll see how that gels out in the coming months. But anyhow, that's bullish. Chart number 2. Mm-hmm. Is an indicator that I use to find panic in the market. Panic in general is energy in the market. And I use a trend to figure out where the panic is. Trend readings of 1.2 or higher predict there's panic in the market. And usually panic only forms at lows. So I got a 3-day trend, I got a 2-day trend, a 5-day trend, and the top window is a 10-day trend. Over the last couple of weeks, the 3-day, 2-day, and 5-day trend all got into bullish territory, but the 10-day never did. It got, I think, 1.11 or something, up in that range, 12 maybe. Not quite to the 1.2 area, and these numbers are not chiseled in stone. I mean, it's usually in those vicinities, but the 10-day trend never did get there. That's 2 weeks of trend readings and panic levels. That's usually quite a bit of energy to push the market up for weeks, if not months. And I noted times in the past, it shaded in tan there, where all 4 trend averages reached bullish levels. And again, we didn't quite get the 10-day trend up to 1.2. So it doesn't have quite as much as energy as those previous times I marked in shaded pink. So anyhow, this rallies. It doesn't really it has some power. You can't ignore it, but it doesn't have a great amount of power. So let's take a big view of what may be developing here, and let's go to chart 3. And chart 3, we actually talked about this in the past, and this is a monthly chart. It looks at the big picture, and we actually did hit a new high in January compared to the previous high. I think it was in November. So we actually did hit a higher high on the S&Ps. On the monthly chart, didn't have a closing high, but we did hit a higher high. But if you look at the bottom window, the SPX ratio, it hit a lower high. And I think there's a good chance that the current rally that's trying to get going right now may hit a new high. And if we do hit a new high sometime in this month yet, and this ratio, SPX fixed ratio, on the monthly time frame doesn't close at a new high, I'm thinking you're probably going to have some sort of a high here. And this market it's not real bearish. These wag breast thrust indicators, the 2, the 3, and the 5-day trend all suggest that you can have a decline, but not probably a big one. So I'm thinking the market may flip sideways here.
I see.
Not a big decline. It's going to be kind of a sideways here. That may change as it's going forward, but I don't like what I see on the SPYs. Ideally, you want to see the SPYs hit a higher high as the SPY is hitting a higher high. And so what that means is the VIX is starting to rise. And normally the VIX starts to rise before the market actually tops out. And so I'm thinking we got a bearish sign on the monthly charts. The weekly charts, not so much yet. So we'll see how that plays out. But so it's kind of, these turns, bottoms are a lot easier than tops, I'll put it that way. Bottoms, you just blow out. And usually you walk into that trade when the whole thing's just totally blowing up. And you try to walk in those bottom trades at the worst possible time you can find. Because when you get into the worst possible times, you usually can't get any worse. So picking bottoms, if you're an experienced trader, you walk in into a death trap, I guess you might say. But sure. Tops take longer. Sometimes they can form several months or even several weeks, and not several months to form. So I'm thinking we may be doing that here.
Well, perfect. Well, Tim, please stay right there. We'll be right back after this break. Folks, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Tim Ord of the Ord Oracle. You can go to his website at ord-oracle.com. Tim, before we went to the break, we were looking at the monthly SPY along with the VIX and that SPY-VIX ratio. Curious if you had anything else you wanted to add on that.
No, it's just a warning sign here. It's on the monthly time. And actually, let's go to chart 5.
Okay.
Here, anyhow, this chart's a little bit messy, but the second window up from the bottom's the VIX. And I put a Bollinger Band on that VIX. If you notice back in December, how the Bollinger Band started to come together. If you know, those pink boxes on the VIX there. If you notice, the Bollinger Bands are coming together and they got really narrow ranges. That was kind of a warning sign that volatility is going to kick in. Volatility in the market usually is to the downside, not to the upside. So we got another situation on the current thing on the VIX here. If you notice, the VIX is kind of have a narrow trading range here. And if you notice the VIX right now, the Bollinger Bands are even coming in more narrow than it was back in December. So we'll probably hit a new high here. And anyhow, the VIX, since it's such a low volatility, it's going into such a low volatility. Low volatility leads to high volatility. High volatility leads to low volatility. So we're going into a higher volatility probably sometime sometime in this month. Mm-hmm. But I do think we'll hit new highs. If you go back to chart 3 again real quick, if the market does hit a new high and this SPX VIX ratio fails to hit a new high, then you're probably looking at some sort of a worthwhile top that it's hard to say where we're going to go. I think basically the blue area I have on the SPY chart, that's where all the high trend readings occur at. And those high readings are on the trend is a support area. But if you notice on the SPYs, I got a place there in pink that have a big gap there right around, 585 area on the SPY. Mm-hmm. You see that? But anyhow, I think we may hit a new high, and sometime probably late February, maybe early March, we're going to go back down and fill that gap.
Okay.
So that's my thinking. That may change, but that's a possibility going forward here. So volatility is probably going to pick up before the month's out, and that gap, that'd be a January gap around 585 may get hit.
Yep.
So we're going to get some volatility, I think, is coming. So we're going to go up, come back down. Then from there, I don't know. So, but this year is going to be a kind of a difficult year for our trading. It's not going to be trending like it was last year and year before.
Sure. So,
but yeah, I'm still long right now. And actually, as we're talking here, we get a trend of 1.2. So the current rally may continue here.
I see.
So we'll see how that kind of short term, kind of up, probably a top sometime mid-month, then back down maybe before the month's out to that 585. A lot of volatility. So that's that.
Yeah,
that would questions on it, or
that would be quite the move. I mean, You know, and you see some, I mean, even looking at this chart, right? Like, I would say it's like there is some, honestly, like inherent weakness in this. You know, we consistently keep trying to break those highs, and we just crack back down, whether that's on news or tariff or whatever it might be, you know, and then we try to go back down or try to go back up and we crack down again. So, I mean, you know, a 485 play would be quite interesting in this market for sure.
Yeah. So that's, I don't know, it's, the market gives you clues. It never gives you a black and white answer.
Absolutely,
it just gives you, so, and that's the hard part about this game. So you got to watch what the clues are. But right now, you know, if you look at this chart on the SPYs, you know, over the last 12 days, not even counting today, we got a trend 1.21. Say we closed there. So over the last 12 days, 6 of those days had trend readings of 1.2 or higher. So that's enough energy to keep going up. You know, I think time's running out.
Certainly.
You know, we could get a new high here, and then from there, I don't know. So let's look at the gold market. We got a little bit of time left.
Oh, yeah.
All right. You got to keep the monthly charts, rule of the weekly charts, rule of the daily charts, rule of the hourly charts, and all the way down. So you really want to take a look at the monthly charts. As long as that monthly chart's in your favor, chances are, if you go with that, you know, bearish or bullish signal, you should make money because the bigger time frames rule the smaller time frames. And we're on a buy signal, I think, from May of 2024. That buy signal still in force as long as those two indicators, which is the up-down volume bands, client indicators, stay above the mid-Bollinger Band, and so far they are. So bigger trends up. Chart number, okay, here's some stuff. It's kind of a warning sign here. This is not a major significant high, but we might see a consolidation start. The reason why, the top window is GDX. Next window down is the daily cumulative up-down volume with this Bollinger Band. Next window lower is a daily cumulative advanced decline with this Bollinger Band. And the bottom window is the GDX GLD ratio. And I put the Bollinger Bands on there because normally if you start hitting above the upper Bollinger Band, you're running into resistance. And all 4 of those indicators, the GDX, the up-down volume, advanced decline, and GDX GL ratio is hitting the upper Bollinger Band. So the market has got away from the mid Bollinger Band too far. Normally it kind of pulls back to the mid Bollinger Band. So we might see a short-term consolidation, not a top of any consequence. But all the blue lines I've listed there on horizontally or vertically rather, are times when all 4 of those indicators reach the upper Bollinger Band.
Sure.
And they had mild consolidation. So I'm thinking we're probably going to hit a mild consolidation here, but it's not going to affect the bigger trend. And we go to chart.
This should be 7.
7.
Yeah.
Or 7. Yeah, 7. This is a little bit longer term indicator. It's not short, but it could pick out multi-month type tops. And what it is the RSI of the HUI gold ratio. Once that ratio gets above 70, a lot of times you'll have a multi-month, if not at least a multi-month type consolidation, even though you still be in an uptrend. And I marked the times going back to looks like about 2000, whatever. And we're kind of like middling right now, we're around 50. So the market could rally several more months before that ratio gets, if it indeed gets up to 70.
Sure.
But in the past, it's worth paying attention to because this is on a weekly time frame. So it's a weekly roll the daily. So we're not even near. So even though there might be a consolidation here short term, it's not an intermediate term indicator, or according to this intermediate term indicator, we're not near any significant high. So that looks good. Chart 8 is the cumulative up down volume advanced client indicators, and they're well above. They're kind of actually, if you run a line across the 30 range on both those bottom 2 indicators, you come up with kind of an overbought market. If you draw trend lines up to those highs, normally a lot of times they pick consolidations, they pull back. So it's kind of another indicator, even though it's a powerful uptrend going here, it's due for consolidation also.
Tim, thank you so much. We're looking forward to talking to you Thursday.
All right. Talk to you then. Thanks a lot.
Stay right there, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We just have a short segment right here. Of course, you're joined by Basil Chapman and Tim Ord. Really recommend checking out those segments on our YouTube channel at the end of programming today. That's going to be Tiger Financial News Network. If you decided to do so, please consider giving the videos a like and subscribing. Tesla. Okay, so you're bouncing off the low of 325.10. All right, so that's some nice kind of resistance right there. And you could see multiple times we've tried to hit around there. Coming back up for the day. Listen. This is like just one of those Darwinian events, I really think, in the market. It is getting worse for Tesla. I mean, this is materially worse conditions. I don't think by next quarter they're going to have sales improved by any means. Additionally, one of the strange things with Tesla, you know, I'm actually looking right now at March 14th puts for 290. I mean, you know, obviously I was all the way out in May as well. This is just deteriorating so much faster than I had really anticipated with that. Of course, you're getting some buying right now, but it makes no sense. I mean, this stock's in a tough area. I mean, this needs to settle around August, September lows and kind of prove itself going forward. Another thing that kind of helped float it during its earnings, but is actually a massive systemic risk for it, I believe, is its Bitcoin holdings. You know, if you get, and this is something to watch going into next earnings, okay? So, I mean, if you get any major problems, right, with Bitcoin, so the price just goes down for whatever reason, maybe we consolidate this level, that's fine. But that is going to impact Tesla, right? Because they have to do the mark-to-market value. So I'm going to be following this. I'm very bearish on the stock. I don't think it needs to be at this level, and I think other people agree with that as well. You know, additionally, with Musk trying to buy OpenAI with some investors, I mean, do you sell Tesla shares to do this? You know, was pretty well known in the past, at least, for selling Tesla shares and just getting a ton of money to do other things as well. You're seeing a little bit of a rebound right now in Tesla, trading off 6.6% for the day at 327.62, kind of selling on that last bar there. Folks, thank you so much for joining me today. We'll see you tomorrow, Wednesday at 9 a.m. Tommy O'Brien Show. Great show. See you then.
Building